Okay, this is a paper May, June 2022, paper 22. Okay, the first question is, Peter is a trader. The following transaction took place in April. April 2nd, cash sales. Third, pay to the Rahat. And then pay, purchase, and the rest of it. See one by one what they ask first. Here they ask to prepare the cash book. So let's move up to prepare the cash book. They give us the cash and bank opening. Here is cash sales was paid direct into the bank. So actually it's a bank account. So this is a sale under the bank account, 410. Number 3, April 3rd, pay 798 to Lahat by check in settlement of the debt 840. Means that got the discount. So April 3rd, share pay to Rahat, and the discount amount is taking the 840 minus 798. So we get 42. And here is the bank amount, 798. Next is 3. Pay 42 cash for the motor vehicle repair. So on the 8th, we pay the motor vehicle repair. So this is the expenses paid by cash, 42. Next is that purchase goods list price 320 on credit subject to the 3 discount. The moment on credit, don't go and put into the cash book. Credit means didn't pay. The double entry is debit purchases, credit Rahat. 18, cash sales. So 18, cash sales. So this is a sales again. But under the cash is 460. On 20th, pay 392 to Samir by telephone transfer. Telephone transfer also under the bank. Has a deduction for the 2% cash discount. So this one on 20th, we pay to the Samir. So this one also got the discount and 2% discount. Pay 398. So this amount should be recorded in here, 392. So how are we going to find the discount amount? So we take this amount divided by 98%, and then times 2%. So $8 is the discount received. Next is that cash sales again, a check for commission receivable, one was paid into the bank. So that means there is a commission received under the date for the date on 25th. There is a commission receivable. Okay, the amount is check amount 115. So this is the amount taken in. And then 29, pay Rahat by cash. Okay, this is by cash. Pay to Rafiat. Rafiat is get the settlement of that. So take 300 minus 285. So you get 15 and use the cash 285. So this is the transaction taken place. So now we calculate the debit and credit amount first before we adjust it. Okay. Let's calculate first. Okay, so now here, these two, you don't need to balance off, but cash account, you have to. So 30th balance, carry down. So take the debit minus, so this is the amount that we get, 268. Whereas here, we take 1445 minus 1190. So this is the amount that we get. So always remember, carry down, brought down must be complete. So balance brought down. Don't need to bring down the discount. So this is the amount that we get. Peter has received a bank statement for April. He is using it to prepare the bank reconciliation statement, and place a tick to show each item will be used to prepare the bank reconciliation statement or update the cash book. So what are the items that we normally use to update the bank statement? So I just explain first. Bank reconciliation statement. So two common items, which is unpresented check and the uncredited amount, which is the cash book already update, bank statement have not update. Okay, the next one, update the cash book. Update cash book normally is referred to the bank statement already updated, but cash book has not. So this is a differences. Now let's we see the item in here. They have few items. Bank charge appear in the bank statement first. So we have to update the cash book because it's expenses is in the credit side. Direct debit for the rent. Rent is also expenses, also in the credit side. Check paid to supplier but not yet cash. This is unpresented check. Unpresented check, in order to prepare the bank, because this is add to the bank statement balance. So we normal situation when we have the bank statement balance, bank statement, we have to add uncredited amount and less unpresented check. Then we get the cash book balance. So therefore, this one, check paid to supplier but not yet cash is unpresented check. So we have to deduct from the bank statement. Check for commission received dishonor. This one is a bound check. Bound check, we have to reverse out to, from the debit become credit. So we have to credit out from the bank, from the cash book. Dividend received. Dividend received is an income. Income will debit to the cash book. So this is all transaction taken place. Okay, now next is that prepare the account for Rahat as it will appear in the Peter book. Balance on the first. Okay, let's we go to first to see what is the transaction that we have. Let's put into here. Okay. Peter is a buyer. Rahat is a supplier. So this will be the trade payable account. So trade payable is a liability account. So which one got Rahat appear? So here you got Rahat. So we put in April 3rd. Put in the bank amount. Okay, the bank amount for it is 798. And then 42 is a discount received. Discount received. So this is what we have. And then after that, okay, here on 15 got the purchases, but purchases only take the net amount, which is take 320 times 90%, which is the net amount for the purchases. So now we can calculate the balance carried out, which is this amount is on the last day, 30th. So find the amount first. Okay, so take the credit minus the debit. So we get 288. So here, 2022, May 1st, balance brought down. One debit, one must be credit. So this is a Rahat account that we are preparing. So the next one, let's see what other question they are asked for. Okay, the next question. Okay, that's all for the question 1. Okay, question number 2. Stella started trading. That means this is a first year account, no opening. All receipt and payment into the bank and all payment are made from the bank. She has no keep full set of account but provide the following. So this is incomplete record most probably. Okay, receipt, capital, loan, sales, payment. This is the item they pay. Okay, now next. Record all the total receipt and in the bank account, showing the cash drawing for the year, balance the bank and bring down. Okay, let's we go to the top on the question and find the information. Okay, since it's the first year, beginning of the year, that means debit side. So what we're going to record will be the year end, which is March 31st. This is a 1 year account. So we put in the receipt part, we have capital. Capital, we have to take notes. Capital should be in the first beginning, because cannot be the end of the year, you only put in the money. So this one should be first. And loan received logically also should be in the debit side. Okay, so here should be the loan received. Okay, this is a bank loan. So the amount 8,000, 5,000, and this one is a sales. All sales bank in, that means in the bank account. So this is a total. And then they say that, okay, record the total receipt and total payment to show the, okay, so they want the total receipt and total payment. So what we got to do is, there's a slightly difference on it. They ask to put total. So we need to change it because they ask for the total receipt, because the question is asking total receipt. Record total receipt. That means here debit 8,000 plus 5,000 plus 36,000. Okay, and then in the credit side we have payment, total payment. Total payment we got, let's see, 17,850 plus 1,200 plus 19 and then plus 7,001. Okay, this is the amount that we have, and there is a drawing, but drawing how much we don't know. We just leave it first, drawing, and then we have balance carried out, which is the asset 2330. So now we take the total debit minus the credit. Okay. Take the debit minus credit. So this one should be the drawing amount, 7,800. Balance carry, balance what down, complete it. So this is April, the April 1st, balance brought down. So this is a slightly special. They ask for the total recording. Okay, now next is that during the year end 31st March 2022, Stella took goods from the business for her own use. The selling price for these goods is 3375. Her markup is 25. Calculate the total drawing for the year. So we calculate the goods first. Okay, sales, cost of sales, and then GP margin. Okay, here we have 25%. And then cost markup is the cost 100%. Sales is 125%. And they say that the sales is 3375. So we need to find the cost. So how are we going to find the cost? We take this, divide by this, times 100%. So we get the cost is 270. So total drawing, it will be goods taken, which is we calculated is this one, 2007, and then cash taken, which is that from the bank account that we calculated 7,008. So these two amounts we add together, then we get the total drawing 10,000. Okay. Now here we have the, okay, what is the information? Okay, they asked to prepare the statement of affair. Okay, statement of affair. Okay, let's put in the information one by one. Okay. So we have non-current asset. In non-current asset, we have what is the item? We have the feature, and I think the group of the account must be understood. Okay, and then what else the asset that we have? No, only one. No current asset. So let's see how many items that we have. We have inventory. We have prepaid, which is the other receivable. Then we have the bank balance. And then that's all. Okay, inventory is 2150. Other receivable 500. Bank is 2330. And then what else? Our bank account is 2330. Okay, then what else? Any more? That's all. So this is the item that we have. 3 items only. So we add the total first. Okay, 15,780. So this is the total amount. Okay, now next is that capital and liability. Okay, because capital and liability is a balancing figure for the statement of effect. We don't put in first, just leave it. And then we have the loan, which is a non-current liability. Non-current liability must try to follow the format. Loan, which is only one item, 5,000. And our current liability, let's see, current liability, we have trade payable only. Trade payable. So trade payable is 1875. So also one item. So this one quite straightforward. So this total must be the same. Okay, we take the total minus liability. So this one should be our capital amount. Okay, now next is that they ask to calculate the profit for the year. So let's calculate the profit for the year. Closing capital. Okay, closing capital is, we get, you can use the T account or calculation method. Okay, here is the closing capital, and we have the drawing. So plus the drawing. So drawing plus drawing is 10,500. So we add the subtotal. So this is the amount. Then next after that, we have the opening capital. Opening capital had to minus. Opening capital is 8,000. So 8,000. So I minus. So this one should be my profit. So profit for the year. Okay, now next is that question number, what else the information? Okay, number E. Stella is now considering whether she should start to sell at least some of her goods on credit. Because now currently she sell on cash term. Advise Stella whether or not she should start selling on credit justified. So personally, I think should, because not all the people can buy on cash. But there's a risk as well. So why is that one? Is let's see how many marks they give. 5 marks. Okay. We talk about the support it first. Okay. The if Stella sell the goods on credit term, she can compete with other competitor and it will help competitor so that the sale should be able to increase. So this is one of the benefit. So other than that, is also help to improve the relationship with customer, because you allow people to owing you. So other next is that, however, the cash flow might be an issue if customer didn't pay back on time. Okay. It is also increase irrecoverable debt, irrecoverable debt if customer didn't pay. So this is a problem. Okay. So now, what is the recommendation that I can think of is that I would suggest to do it. I will suggest that Stella sell some of the goods on credit to existing customer who have good payback record, or she knew them well before credit term given out. So this is to reduce the chances of the irrecoverable debt. Only choose those customer which have the trustworthy, okay, they only give the discount. So that is the answer that I give. Support the credit term. Okay, question number 3. Mosi is a trader. The total of his trial balance is not balanced. So this is suspend account topic. Mosi later discovered that the following: commission received. Okay, let's see what's the question. Prepare journal to correct the error. Narrative are not required. Okay, so The number one, what is the adjustment can be made? Commission received has been debited to the discount received. Okay. The entry to the bank account was correctly made. That means one side error. Commission received omitted. Commission received omitted should be 96 omitted, and also that discount received wrongly debited. So we have to reverse out the amount 96. So become the amount is double. So 96 times 2. So this is one side error, suspend account coming in. And number 2, the total of sales journal 1258 was transferred to sales account as, so sales account overstated. So we have to debit sales to reduce the overstated amount, 2850 minus 2185 minus 1258. So we get 927. Okay, this is also one side. So suspend 927. Number 3, a check payment for motor expenses 77 has been omitted from the bookkeeping record. That means totally this is an omission. So motor expenses we paid and using the check. So credit bank 77, 77. The number 4, a payment by electronic transfer was recorded as a payment in the petty cash book. So payment bank, but go to put into the petty cash. The petty cash is wrong. I had to reverse. So petty cash book 135. Okay, and then another account is electronic. Electronic is a bank account. So 135. So this should be the double entry. Number 5 is an invoice form was credited to account of Stella. This one is wrong supplier. We are credited to, so we have to debit Stacy 160 and put the correct one, Tracy 160. This is a commission error. Okay, so this is the answer that we get. Now next is that they asked to prepare the suspend account. Okay, just put in the suspend account, find opening balance. So we use this one, prepare suspend account. Based on the information that we get, the first entry we don't know. Okay, this one is for the April. April 30th. So opening, we don't know, leave it first. Okay, here suspend. So we got to put in 96, 96. So next is that credit suspend, which is the sales. So sales 927, and then suspend no more, only this few of it. So calculate the total first. Okay, so we have the debit balance 192. So this one differences in on balance, which is 735. So this is the balance that we get. In the next one, they ask to calculate the profit. Okay, the original draft profit. Okay, let's put in first. corrected profit for the year ended 30th April 2022. Okay, drafted profit is 39970. Let's make move up easier to see. Yeah, put into here. From the adjustment, we know should be increased. So these two credit, that means it will increase the profit. So this one should add. So I put into here. The amount 96. Whereas the next one is sales debit. That means it will decrease the profit. Okay. Here decrease, here increase. Okay, so take notes, 927. And then motor expenses also debit, so also would decrease. And then after that, this one no effect. So this all the transaction. So let's put in the transaction. So this one is a decrease, so we have to minus. So this one have to minus. Take this amount minus this amount. So what else the information that we get? Okay, so this is the revised or corrected profit. So 39158. Okay, the next one. Let's see what else the question. Okay, that's all for it. So this is a question number 3. Okay, this is question number 4. They ask for the inventory. That means the valuation of inventory. Valuation of inventory saying that we always have to choose lower of cost and net realizable value. So this, take note, sorry. So from this list of it, which item that we should choose? Now we do one by one. For the A, we have bag of apple. Your paper, you have the quantity. Selling price $8, cost is, so we have to take the 240 and then $4.50 and then add off envelope 225. And we have carriage inward. Carriage inward total add up is $6.50. Selling expenses. So let me see. This is the cost. This is net realizable value. This one is $8. This cost will be $6.50. This one will be 10 minus 1.5. Okay, then not tag. Okay, not tag is 150. This one $6. This one $5. Okay, boxes of pencil. So this one is 96 plus 350. So is okay. The lower, which one is the lower? Lower, we should choose this one lower, this one lower, this one lower. And then this one is lower. So the value will be quantity times the lower price. So this is the total amount we get. 1, 2. Okay, let me see where's my mistake. Okay, 225. Here is $6. Here is $8. Okay, then here is 332. Okay, this one is my mistake. This one lower is this one. I did the wrong one. So that's why I cannot get the answer. So this should be this one took the wrong quantity. This is a quantity. Okay. So this is a closing inventory amount. Choose the lower. Okay, now state the accounting principles. This is a prudence concept. Okay, prudence. Okay, complete the following. Whether should be treated as an expenditure or not. Okay, let's see what is the industry that she's in. Okay. Nasla is a trader who buy and sell stationery. So take notes, this is a stationery. Stationery, they normally have the paper. Computer printer, paper normally is they buy to sell. Computer equipment, they should buy it for own use. Install, also the capital expenditure because first time installment. Motor vehicle should be done current asset. Insurance always is a revenue expenditure. Delivery of the motor vehicle. Delivery charge, this is referred to the delivery charge when they buy the motor vehicle. So this is the cost, initial cost. So this should be the answer for it. Okay, now next is explain how the materiality is applied on the treatment of the non-current asset. Okay. Explain how, okay, materiality principle is to record an item as non-current asset or expense of the item. Recording the low value of non-current asset can be costly and time consuming. Okay. Item which do not give significant impact to profit would be recognized as expenses rather than non-current. Okay, so this is the explanation we can use to explain the non-materiality. Okay, Nala has treated the receipt of bank loan as a revenue. Bank loan is actually capital receipt. So that is the impact. So complete the table by place, show the effect on the capital and the liability. So here, first of all, bank receipt of a bank loan. This one should be the capital receipt. So capital receipt, this one should be the non-current liability. So what happened to the non-current liability? The non-current liability will be understated. But however, this recorded as a, when you recorded as a revenue receipt, then our revenue increase. Revenue increase, profit will be overstated. Profit overstated, capital will be overstated as well. So in this case, the impact will be, so capital effect, capital will be overstated because this one, and then effect on the liability will be understated. So this is the impact for it. Okay, now let's move on. Nala has charged depreciation on her shop at 25% per annum using reducing balance method. This year, she is considering changing this to 10% using straight line, as this will improve the profit. This is not allowed. So when you want to adjust just because you want to make it better, this is not allowed under the accounting standard. So here they advise Nala whether or not she should change her depreciation method. Justify your answer. So when they say advice, you must give pro and con. So pro benefit is that the benefit of changing to straight line method is easy to calculate, and the amount is same to the period use. So this is a benefit. All the while, the amount same, you don't need to keep on calculate the depreciation. So this one will save the time. It will save the time for administration. So this is a benefit that she will get if she, okay. Now is that, okay, let's move on. Okay, what else that can think about it? Non-current asset, it could be the nature of the asset are more suitable to use straight line rather than reducing balance. So she should change to reflect better value of asset. Okay, so this is a benefit. But disadvantage is that it is against the consistency principle, which the change of the method because of to improve the profit for the year. Okay, so this is not allowed. Then after that, the profit may be overstated and give wrong information to investor. So this is the possible reason for the advantage and disadvantage. And then next recommendation, I would not agree to change the method if Nala intention is to improve the profit for the year. You should check whether the asset should use reducing balance or straight line method. Depend on its nature of use. So this is the answer that I will share. I not agree that she take the change the method just to improve the profit, because this is against the accounting standard. Okay, let's move on. Okay, that is for the question number 4. Last question. This is the M limited. Okay, here information given. Let's see what's the question about. Okay, they asked to prepare the income statement. So let's prepare the income statement. M limited income statement for the year ended 30th November 2021. Okay, 2 column needed. Okay, we bring up easier to see. Okay, 2 column. Start with the revenue. Always start with the revenue. So revenue is 203,600. See whether got any sales return. Okay, no sales return. Okay, we put in the amount from the trial balances. Additional information later we do adjustment. So less cost of sales. Cost of sales, we have inventory at 1st December 2020. Okay, next we have purchases, and then inventory at what year? 30th November 2021. So this one later. And then see, put in what is the amount that we have first. 12945. And then purchases 143,750. Closing inventory is 12830. So this is the amount that we get. So plus and minus, plus minus. So this is our cost of sales. So take the revenue minus the cost of sales. So we get the gross profit. Is there any other income? So this question don't have the other income. So we less expenses, no other income. So what is the expenses that we have? We have rent and rate. Just put in the amount first. Later we will adjust. If any adjustment, 12460. And then operating expenses is 12920. Okay, wages is 24380. And then equipment, we have depreciation. When you see equipment asset, normally have the depreciation for equipment. Okay, the next one, what else? Okay, provision for irrecoverable debt. So this provision for doubtful debt. Okay, we should have the irrecoverable debt. So increase in provision for irrecoverable debt. So these are possible information needed. And then what else? That's all for it. Now we see any information. Depreciation on equipment to be charged at 25% using reducing balance method. So the depreciation charge, the reducing balance method. So take 40,000 minus 17500 times the 25%. So this is a working. So we calculate first. 40,000 minus 17500 times 25%. Okay, and then accrued operating expenses 415. So accrued of the operating expenses accrued had to plus. So 12920 plus how much? Plus 415. 415. So we have to plus 415. End of the year accrued had to plus. So plus 415. Okay, now next is that rate include the payment for 3 months from the October to 31st December. Our financial year end is 30th November. That means there's a 1 month prepaid for it, which is the December month. So we have to minus. So rent and rate have to minus 12460 minus how much? Minus 1 month prepaid. So we take 2250 divided by 3 and then get the amount. So let's recalculate. Minus 2250 divided by 3. So we get 1170. And then the provision to be set as 4%. So 4%. So we calculate. So let's put in the amount. So we take the trade receivable 9800 times 4% minus the opening 295. So let's calculate 9800 times 4% minus 295. So this is 97 should be the answer. So subtotal the amount. So subtotal we get the amount is so 55147. So now next is that okay, this one is profit for the year. So this is the amount that we get. So now we minus. So we get 4588. So this is the profit for the year. Okay, next is they asked to prepare the statement of change equity. So let's refine the information first. Okay. So our opening capital, we have ordinary share 20,000 and then general reserve 3,000 and then retained earning 2037. Okay, now okay, and here we have the profit for the year. Profit for the year. Profit for the year is 45. Okay, and then dividend pay. They have dividend pay to the ordinary share, which is the minus. So we have to put minus 1600. This is to minus. And then after that, let's see what else the amount. General reserve. Let me see. Okay, here's 1,000 is to be transferred to the general reserve. That means here, transfer to general reserve 1,000. So here 1,000, here will be, have to minus 1,000. So we get this amount. So subtotal first. Okay, and then subtotal. So this is what we have for the statement of change in equity. Okay, now let's move on. Let's see what else the question about. Okay, question C asks to calculate the liquid asset. So let's see what's the information. Our liquid asset, liquid ratio. So we have the amount for the asset. What's the asset that we have? Closing inventory, book is not the bond. And then asset we have bank 162. Okay, plus the 9800. Okay, and then minus the 9800 times 4%. Okay, after that we have what else? There's only 2 items. There's need more. 7. Okay, what else that we got? There is a one prepaid amount here. Prepaid amount rent. Okay, 2250 plus 22 plus 2250 divided by 3. This is the total. And then divide. Okay, this is a current. Okay, I put the current asset. So this is the amount that we get. Okay, current liability. We have the trade payable 11585. And then what else do we have? We have accrued amount 415. So our current liability. Okay, now the ratio will be 10320 to 1200. So we get, let's calculate. Take this divided by this one. So we get 0.6. 0.8621. So this is a ratio that we get. Okay, now next is that last of it. Okay, the managing director, Emily, plan to buy new equipment to improve the profitability of the company. She's considering whether to fund the equipment by using ordinary share or request a bank overdraft. Okay, advise whether to fund the purchase by using further ordinary share or justified. Okay, the benefit of it by funding with issuing further ordinary share. It is internal funding and no fixed dividend must pay back immediately to shareholder. Okay, this is the benefit. Internal fund, no need to pay back immediately. But if we funding using by funding using the bank overdraft, the company have to repay the loan and interest on time. The bank will ask for secure asset in order to approve the loan. My suggestion is that the company should using further ordinary share to fund the purchase of the equipment. Okay. There's one disadvantage of the funding of the internal, which is that the problem may face in future if fund through additional ordinary share is they may lose control over the company to outsider. So this is a possible the risk they need to take. Okay. So there's pro and con. One good thing, you take fund outsider, which is the bank overdraft, your control still with you. So this one you can say that by borrowing from bank, the company will within the existing shareholder and dividend won't be diluted due to increase in the increase in share. Okay, so this is the answer that I'm taking. I prefer to do the internal funding. Okay, so but the risk is they may lose the control for it. So that is what the answer that I'm making. Okay, so now done for the question. So that's all for the question 5.